Good morning, Jags. This is Fahad. Today is Thursday, December 17th. Let's get started. The chart that's in front of you is C Limited, symbol SE. Now, yesterday we discussed this briefly in the chat room, so I wanted to come back today and provide some more new fresh updates. Let's start off with a technical picture. Here is the picture that I showed, and you can see that this is a perfect bounce off the trend support, which also happens to be the bottom of the channel. And that 185 level also happens to be the major VOP support level. So I bought call options in this stock yesterday, and I mentioned that in the chat room. But important thing is why it went up when it broke out in early December, what caused the stock to pull back, and why it should bounce back from this important support level from 185. So take the news flow that is pouring into the stock and try to put that in the context of what stock is doing and why it's doing. So that's what I'm going to do this morning. The reason why the stock broke out sharply from here was because this massive important news came out, which we had been anticipating ever since we made this as a top pick in the second quarter outlook, in the Jaguar second quarter outlook this year, which was that the company received finally the approval to operate a digital bank. So they were approved for the digital banking license in Singapore. We had talked about this previously, and we had been anticipating that ever since June. So it finally happened. This is a huge game changer for the company. And as a result, the stock sharply broke out in very heavy volume that day, rising within a couple days from 185 all the way to $210 per share. The company used that strength in its currency, which is the stock price, to do a secondary share offering. And not only did it a secondary share offering, immediately the very next day, they upsized the secondary share offering because the demand from the institution was quite strong. And as a result, the stock started to deflate and pull back on light volume. But what that secondary share offering did was that secondary share offering was completed on December 11th, and the very next day, on December 12th, many people probably don't even know, there was a major online shopping event in Shopee, Shopee, which is the primary portal, e-commerce portal in Asia that the company has for Malaysia, Indonesia, Thailand, Singapore, and all these other countries. And so now we know exactly how this company performed based on that major sales event that happened. They called that their birthday. It was their fourth birthday, December 12th, that it was. And so here is some color on this one. So the company ended up selling 4 times more items on December 12th in the very first hour of that sales event versus 2019. In other words, 14 million items were sold on the company's website per hour on December 12th, which was 4 times more than how it performed on the same exact birthday sale event that happened in 2019. And here is what we know. The company saw ridiculous amount of record-breaking sales on December 12th, with the number of hours spent on Shopee and Shopee Bubble and Shopee Candy was 28 minutes per average person, or 28 million actually, I'm sorry, in total. 2.7 billion game plays. Shopee Pay saw 18 times increase in orders via Shopee Pay. Shopee Live had 450 million views on that day on December 12th. We're talking last week and over here. And across the region, it was just absolute blowout. In the first 24 minutes of the event, the company sold 12 million items across the board, 1 million items per minute. At the peak times on December 12th, the company was selling 1 million items per minute. I do have a bit more update on this one, just in case if you wanted to know. So for example, for its home and living business, the consumers were buying 100,000 3D wallpapers per minute. For the beauty and personal care segment, which includes skincare products and all kinds of other things, consumers were buying 550,000 skincare products per minute. For the mobile and gadget, 400,000 smartphone accessories were selling per minute. And similarly, top keyword searches on December 12th were New Year gift or iPhone case and all kinds of things. Thailand surprisingly had a very, very strong showing. And Thailand saw ridiculous amount of sales. This was one of the hottest regions where we saw some of the most robust activity than compared to some of the other regions. Overall, 450 million views were recorded on Shopee Live too, as a lot of these businesses were actually showcasing live and such and such. These are record-breaking numbers, very, very strong. All of this happened on December 12th, and meanwhile, the stock is pulled back because of the secondary share offering and is starting to bounce back. Yesterday, somebody bought over $500,000 worth of February 220 strike call options. Here's a snapshot of that. They came in right before noon yesterday and they bought overall about $700,000 worth of February 220 calls, paying all the way up to $10.05 offer. That 220 strike is all the way up here. It's about 3 months out or 2.5 months out to expiration, with the stock at 192 right now. And they're betting it's going to trade. The stock is going to trade above 220 by the time the next earnings report comes out. So that's my view on C Limited. Another stock I want to just briefly quickly touch. This is a name that in which Chronicle produced a Jaguar media video a while back, which is available under the Chinese Tech Demystified series. It's called DADA Nexus, symbol DADA. A very, very strong earnings report came out not too long ago. This company posted earnings, I think it was on November 19. The very next day, the stock absolutely shot up, and just in the matter of 5 to 6 days, the stock actually doubled. Huge high volume breakout. But then, similar to how we normally see, this company took the advantage of that very strong currency and ended up announcing a secondary share offering. In this particular case, that secondary share offering surprised many because a little bit larger than normal, than most had anticipated. But it also means that the company has essentially now doubled the cash positions on its balance sheet. So the balance sheet is now full of liquidity, doubling the cash positions, which provides them the capital to continue to invest into the infrastructure platform, into to continue to build out the relationship with JD.com. Just a reminder, if you go to the Jaguar Media website and you type in $DADA, you will see right here from August 27th, that's when Chronicle presented a big bull case for this company. Now, I bring this up because while this stock went all the way to $60 per share and it has since pulled back and is currently sitting right back to what was important resistance level and is now an important support level, right around $38 per share, Bank of America is out with a interesting bullish view on this stock, and that's right over here. They're acknowledging that with the secondary share offering, which was about 9 million ADS, the balance sheet, the cash on the balance sheet has essentially doubled, which basically supports the plan for its expansion going forward from here. And they believe that JDDJ platform continues to benefit from the two recent drivers, including geographical expansion indicated by 100% year-over-year growth rate in its coverage of counties and cities in the third quarter 2020, and the higher ticket size of its core supermarket fresh produce category after the pandemic, which is still up 35% year-over-year in the third quarter of 2020. In addition, they're adding more new product categories beyond the supermarket category, which was covered by Chronicle in his presentation back in August in Jaguar Media, and which is allowing the company to create a more new partner network by signing up deals for electronics such as skincare products, fashion apparel shops, and such and such. So overall, these are all very, very positive trends for the company over the long run, and the cash should support this expansion. So I will just stop over there, but the important thing is when you look at this chart, very high volume breakout followed by secondary share offering, and it's now back to important support level. Unfortunately, no options are available in DADA, but we'll monitor exactly how the stock will perform from here. And that's it from me. Jay.
Morning, everyone. So today I'm looking at Aspen Aerogels. Ticker is ASPN. As you can imagine, we've never covered this name before,
Yeah.
but the company develops, manufactures, and sells aerogel insulation products for use in energy infrastructure and building material markets. Some of its products are called Pyrogel, Cryogel, Spaceloft, and Pyrothin. Now, as I mentioned, they're using these products in energy infrastructure. So if we give an example, the refining and petrochemical end markets, these products are used to minimize what's called corrosion under insulation, or CUI. And CUI commonly occurs on insulated carbon and low alloy steel and stainless steel equipment that operate at high temperatures. And if left undetected, CUI can result in catastrophic leaks or explosions, equipment failure, prolonged downtime due to repair or replacement, and then safety concerns. Now, yesterday, or last night really, Fahad, you pointed out some unusual option activity that occurred in yesterday's session. And with the stock currently at $16, there was some small but unusual buying in the May 22.5 calls for $1.75 when the bid ask was $1.10 by $1.75, and then in the May 25 calls for $1.25 when the bid ask was 55 cents by $1.25. Needless to say, small but aggressive action. If we take a look at the Q3 earnings report, to kick it off, the company, of course, saw declines in their energy segment. Basically, these products that they have, they're installed by contractors working in refineries, petrochemical plants, and LNG terminals. And in response to COVID, facility owners have limited the number of contractors on site in order to reduce worker density. So revenue was negatively impacted. And then for their preliminary 2021 outlook, management said COVID's going to continue, so it's going to constrain demand. Everything will eventually get back to normal, but we don't know when yet. But the biggest announcement from that earnings call, and the reason why I believe you're seeing this option activity, is from an EV announcement that the company made. They announced that a major US automotive OEM awarded the company a contract to supply Pyrothin thermal barriers for use in its electric vehicle battery platform. Now, these thermal barriers help EV manufacturers to manage what's called thermal runaway. And that's a phenomenon where a cell in a lithium ion battery pack has a sudden release of energy that potentially results in a fire. The battery platform of the major US automotive OEM will power its next generation EVs, with production expected to begin in 2021. They will provide the Pyrothin product in the fourth quarter for a prototype fleet. And based on the OEM's projections for 21 and 2022, they expect to generate single-digit millions of dollars each year, but over the coming decade, their potential revenue from this customer alone represents a nearly $1 billion opportunity. Now, after the earnings report, H.C. Wainwright was out with a note. They raised their price target to 18, and they pointed out that management also highlighted that 10 companies, including global auto OEMs, battery manufacturers, and tier one auto suppliers, are currently testing the Pyrothin product. So they go on to say, we believe global automakers are moving at a rapid pace to capitalize on the shift away from internal combustion engines and are accelerating efforts to bring new EV models to market. The thermal runaway issue is an important safety issue for EV battery management, and we anticipate further platform wins for the company.
Excellent. Fantastic background over there. So much that I learned from this discussion here. I do have a couple points or comments or whatnot. So do we know, first of all, who that large OEM is that they signed the contract with?
At this point, no, we do not.
Okay. Okay. But chances are it's probably somebody, one of the three Detroit automakers, or somebody from international. It has to be a car company,
Mhm.
I would imagine. Secondly, just so that the audience understand exactly from all that technical discussion on the product side from you, is that essentially this company is creating a film or a layer to stop lithium ion fires from happening, right? I mean,
Yes,
that's at the crust of all this. So
correct.
the way this company is a play on the electric vehicle market is that these lithium ion batteries have to be protected in such that the fires just doesn't blow up the entire car.
Hmm.
And the film or the layer they produce for for these automakers is to is for just for that very reason. So naturally, with so many cars now lined up to come out as being, electric vehicles in the next couple of years, so a key product from this company should naturally benefit from all of this, as the demand side will remain particularly strong. One another observation I will quickly make is that when I'm looking at the revenue projections from this company, the street isn't exactly all that excited yet, and
Hmm.
it makes me think they haven't really factored into as to what the potential could be. So for example, I'm just randomly picked up one analyst from here, which is the Canaccord Genuity. They expect revenues in 2021 to be 108 million, which is less than 4% growth year over year compared to 2020. That doesn't seem all that exciting to me. But if we're talking about, based on this discussion, that there is this partnership with an OEM, and we're going to get more and more such partnership from GM, Hyundai, Tesla, BMW, and such, I think maybe there's going to be elements of surprise there with beats and raises each time when the company reports earnings in the quarters to come, right?
Absolutely, absolutely.
Okay, fantastic, Gustav. Really good. So yes, this is where we saw some unusual call option activity pick up yesterday in the May 22.5 and May 25 call options, with the stock trading at $16 right now. We'll keep an eye on this one. Chronicle.
Good morning. So I was going to finish up my list of under the radar themes for 2021, but instead I'd like to bring a bullish trade setup today for One Life Healthcare, symbol ONEM. We previously covered this in detail before in the Q3 outlook. And before I talk about this, I should declare I'm already long. I had the stock on my watch list ever since they reported that blowout quarter and guidance, but I didn't want to FOMO and risk being left holding the baby after it already popped. So I waited for the dip and a retest of support, and I got long around little over $34. And currently the stock is trading in a tight range, and I think the next direction from here will be higher. So a couple days back, Canaccord published an update on the company, which came with a price target raised to $46. Like they hosted an investor meeting with the company's CEO and CFO, and although I didn't really gather anything that was new or groundbreaking from what I was reading, I still have to say the takeaways are quite interesting. Like there are a couple things that caught my attention from this investor meeting. First of all, management reiterated that they now have a health partner in every existing market, as well as the 5 new markets they had previously announced for 2021. Now, this is not new, but the new part is that Canaccord, following this meeting, is now projecting recurring revenues as percentage of total to be 61% versus 47% in 2019. Recurring revenue has always been one of the main bull cases for the company, but I believe this was the first time since the last earnings that we're now getting an actual quantitative forecast. And doing some very rough math here, if I plug in 61% of revenue as recurring, while conservatively approximating new business from the 5 new markets to be roughly 10% of total revenue, and then holding everything else constant, that gets me to FY20 revenue of roughly 385 million versus management guidance of between 362 to 367. And then if I look at consensus estimates for FY21, so next year, it looks like the analyst community is expecting roughly 450 million in sales, which would imply roughly 23% growth versus 2020 expected sales. So If I'm seeing this right, Fahad, Wall Street is essentially forecasting a sizable deceleration versus the 30% growth we've been seeing throughout this year on a trailing 12-month basis. I think they're being way too conservative here, because if we look at the management commentary from this note, the company has told Canaccord's analysts that they are just beginning to scratch the surface of the commercial primary care market, and they're going to have partnerships in 17 markets by year end 2021. In Q3 earnings, One Life's partnership revenue grew 111% versus net patient service revenue growth of 14%. So you can see why management is focusing on partnerships. And I don't think this pivoting has been fully factored in to the consensus valuation forecast. Like one of the reasons why the stock had been struggling in recent months is because this low growth within the net patient services side of the business, like it looks bad optically, but in reality, it's because management is pivoting towards partnerships and recurring revenue and high revenue retention. Therefore, this transition is always naturally going to pressure growth in that other segment. So I guess the message here is that this company is still misunderstood by the market, because they're not looking beneath the surface and grasping what management is trying to do. Valuation also used to be high when it first IPO'd, which was another reason the stock had been struggling. But with recent earnings and revenue beats and blowout guidances, I think the company is starting to grow into its valuation. And then to finish off, there was one other little interesting nugget from this investor meeting. So apparently management emphasized that they are starting to see the quote unquote buyer for their customers is now beginning to be the CEO and CFO rather than HR benefits, which was previously the case. Now, Canaccord is saying that this is positive for One Life because it's a sign that leading corporate decision makers are now beginning to be more aware of the importance of health and safety of the employees. And this is a bullish read for the company because their return to work programs are not tied to the benefits calendar year to the degree of their other competitors. So this makes One Life's offerings relatively more flexible.
Yeah, interesting stuff. And so just a reminder to everybody, this is the write-up from the Jaguar third quarter outlook, in which we made ONEM as a top pick. And the stock in that quarter did not exactly perform to our expectations. As you can tell, there was a strong run initially, but then the stock deflated and spent most of the quarter just basing formation and didn't quite perform the way we expected. But in the following quarter, it has been actually steady climbing and everything. The opportunity here is very, very strong. It's a secular play on a very strong industry. And so there are very, very strong positives over here. The tailwinds that should continue to be in the favor of the company, many of which Chronicle just discussed over here. And nice chart that is now starting to climb higher. Should go all the way back to new 52-week high, well into the mid 40s or even high 40s in the next coming months, in my view. All right, Chronicle, thank you very much for this update. Impressive stuff. And Jax, we will see you in the chat room shortly.